Welcome back, everyone. Today, we're tackling a financial heavyweight, Visa. We're going beyond the surface level to see if it truly deserves a spot in your investment portfolio. Think of this as your all-access pass to understand this payments giant, from their impressive financials to the challenges they face in a rapidly changing industry.
Exactly. We'll break down their strategic moves, their position in the global payments landscape, and, of course, the potential risks and rewards for investors.
First things first, let's make sure we're all on the same page.
Okay.
Visa, the company, practically synonymous with credit cards. They're way more than just a plastic rectangle in your wallet. They operate in over 200 countries, processing trillions of dollars annually.
Think of them as the invisible thread connecting buyers and sellers globally.
Yeah.
Understanding how that thread works, the mechanics of that exchange, is essential when you're evaluating Visa as an investment.
Okay, so let's jump right into their financials. Visa wrapped up fiscal year 2023 with a bang, pulling in a whopping $33 billion in net revenue.
Wow.
That's an 11% jump from the previous year, which is pretty impressive considering the roller coaster the global economy has been on.
It really speaks to their resilience. What's fascinating is that they didn't just weather the storm.
Right.
They thrived. And they're not just sitting on that cash pile. Visa is actively returning value to shareholders, authorizing a new $25 billion share repurchase program. They're putting their money where their mouth is, which is a good sign for investors.
Absolutely. And they've already repurchased 55 million shares for $12.2 billion during the last fiscal year. So they're serious about this. But let's break down that 11% revenue increase. A big chunk comes from consumer spending, people swiping those cards for everyday purchases. But the resurgence in travel has played a big role, too.
International travel is a goldmine for Visa.
Oh, yeah.
Their cross-border transaction fees are substantially higher than domestic fees, which is why travel is a crucial driver of their profitability. This reliance on international travel, however, does make them vulnerable to global shocks, whether it's a pandemic or geopolitical instability.
That's a great point. Speaking of global events, remember the sanctions against Russia in 2022?
Right.
Visa had to suspend operations there, which did impact their bottom line, but maybe not as much as you might think.
It's interesting, right? Revenue from Russia only represented about 2% of their total revenue in 2022.
Okay.
It highlights the incredible diversification of Visa's global reach. They're not overly reliant on any single market.
So they're financially strong, but they're not just resting on their laurels. Visa is looking ahead and making some pretty bold moves.
Absolutely. They're pursuing a multi-pronged growth strategy.
Okay.
They're still innovating to expand their core consumer payments business, keeping those Visa cards top of wallet, both physically and digitally. But what's really exciting is their push into what they call new flows.
New flows. What exactly does that entail? I have to admit, I'm not super familiar with that term.
New flows is Visa's term for non-consumer payments. We're talking about business-to-business transactions, peer-to-peer payments, government-to-consumer disbursements, a whole world of payments beyond the traditional consumer space.
That makes sense. So they're expanding beyond just your everyday purchases.
Right.
But is this segment really significant enough to move the needle for a company as large as Visa?
It's more significant than you might think. This segment saw a 22% revenue jump last year. A great example is Visa Direct, which allows governments to distribute funds directly to citizens' Visa accounts, often bypassing traditional banking systems altogether.
Wow, 22%. That's huge. So they're tapping into some serious growth potential there. It seems like they're not just reacting to changes in the payments landscape, but actively shaping the future of how we pay and get paid.
Exactly. And this forward-thinking approach is a key takeaway for investors. It's not just about riding the existing wave of consumer spending. It's about anticipating and adapting to the evolving needs of businesses, governments, and individuals.
And they're not just focused on transactions themselves. Visa is also pushing into value-added services, offering a wider array of tools to deepen relationships with their clients. Things like fraud prevention, data analytics, security solutions, even consulting.
It's a smart move. By providing these value-added services, they're creating a more integrated and indispensable ecosystem for their clients. They become much more than just a payments processor.
And speaking of strategic moves, we can't forget their acquisition of Pismo in June 2023 for a cool $1 billion.
Now, this was a significant purchase.
Yeah.
Pismo is a cloud-native issuer processing and core banking platform. It's particularly attractive to fintech companies because it's flexible and scalable. This acquisition gives Visa a strong foothold in this rapidly expanding fintech market.
So they're not just buying companies, they're buying into the future of finance. It's clear that Visa is not content with just being a credit card company. They're actively diversifying, pursuing new revenue streams, and strategically positioning themselves for the future.
And for investors, this is a key consideration. They're not just riding a trend, they're actively building the future of payments.
Right.
But it's important to remember they're not operating in a vacuum.
Yeah.
Let's shift gears and talk about the competitive landscape Visa faces.
Right. The global payments industry is a cutthroat arena. What are some of the major players Visa is up against?
You've got the familiar giants like MasterCard, American Express, Discover, and UnionPay, which is particularly dominant in China.
Right.
But it's not just the established players. The rise of alternative payment providers, especially in the digital space, is creating a whole new level of competition.
It's like a David versus Goliath scenario, with these agile startups challenging the giants. What are some specific examples of these alternative payment providers?
We're talking about mobile wallets, peer-to-peer payment apps, even cryptocurrency platforms.
Wow.
These new entrants are often unburdened by legacy systems and are quick to adopt disruptive technologies and business models.
That sounds like a real challenge for a company like Visa, even with their size and reach. How are they holding their own in this increasingly competitive landscape?
Well, in 2022, Visa processed a staggering $11,668 billion in payments volume, significantly more than MasterCard's $6,568 billion. That clearly demonstrates their leading position. However, breaking into the Chinese market with its unique dynamics and dominant local players has proven difficult.
So even for a giant like Visa, there are certain markets where they face an uphill battle. What are some of the specific challenges they're encountering in China?
Alipay and WeChat Pay are already deeply embedded in the Chinese market, especially for e-commerce and mobile payments. Even if Visa obtains a bank card clearing institution license in China, which they've applied for, they'll be playing catch-up. And UnionPay, with its strong domestic position, is also expanding internationally, adding another layer of competition.
It seems like there's no shortage of challenges for Visa, even with their dominant position. What are some of the other potential disruptors they need to keep an eye on?
Real-time payment, RTP networks, are one to watch.
Okay.
Government-backed initiatives like FedNow in the U.S. and Pix in Brazil are creating alternative payment methods that could put pressure on Visa's pricing and market share. These systems offer instant payment settlement, which is a compelling feature for both consumers and businesses.
That's a good point. And what about the whole open banking movement? I've heard a lot about that, but I'm not entirely sure how it might impact a company like Visa.
Open banking is a game changer. It essentially allows consumers to share their financial data with third-party apps and services. This could force Visa to share network access, potentially eroding their competitive advantage.
So increased competition from existing rivals, agile new entrants, and the rise of disruptive technologies like real-time payments and open banking, it sounds like a lot to juggle.
It is.
What are some other potential headwinds they face?
Regulation is a big one. The payments industry is heavily regulated, and those regulations are constantly evolving. New rules on interchange fees, data privacy, and security could significantly impact Visa's business.
It's like they're navigating a constantly shifting landscape. So we've talked about the challenges, but let's zoom out and assess Visa's overall investment potential. What are their key strengths?
They're the undisputed leader in the global payments market, with massive market share and a proven track record of profitability. They're consistently generating billions in revenue and are committed to returning value to shareholders. Plus, their brand recognition is unmatched. That Visa logo carries a lot of weight.
Absolutely. But you've also highlighted some significant risks. What should investors be most concerned about?
The competition is fierce, and it's coming from all sides. Established giants, nimble startups, and disruptive technologies are all vying for a piece of the pie, and the evolving regulatory landscape adds another layer of complexity.
So they've got strengths, they've got risks. What's the bottom line for investors trying to decide if Visa's is worth the investment?
That's the million-dollar question, isn't it? Understanding both the opportunities and challenges is crucial. Visa has a lot going for it, but investors need to carefully weigh both the potential rewards and the potential downsides.
All right, so we've covered a lot of ground, but let's dive into their financials a bit deeper to see what the numbers really tell us about Visa's performance and potential.
Excellent idea. Let's open up their Form 10K filing and see what insights we can glean from their financial statements. Visa's Form 10K for 2023 is a treasure trove of information for investors.
I bet.
Their net revenue for the year hit an incredible $33 billion, but it's crucial to understand where that revenue is coming from.
Right. It's not just about the big number. It's about the breakdown. So where is Visa actually making its money?
Their revenue streams are actually quite diverse. A significant chunk comes from service revenues fees charged to financial institutions for the privilege of using the Visa network.
So every time someone swipes their Visa card, the bank issuing that card pays Visa a little something. It's like a toll booth on the information superhighway.
That's a great analogy. And those microtransactions add up fast considering the sheer volume flowing through Visa's network. Beyond that, they generate revenue from data processing, which includes authorization and clearing services, making sure those transactions go through smoothly and securely.
So it's not just about connecting the dots, it's about ensuring the system works flawlessly behind the scenes.
Exactly. And then there are the international transaction revenues, those juicy fees generated from cross-border transactions, which are a real sweet spot for Visa.
Makes sense given what we discussed earlier about the higher fees associated with international travel. But there's another piece of the revenue puzzle, right?
Yeah.
What about those value-added services we talked about?
You're right. We can't forget those. That's where their other revenues come in, encompassing things like fraud prevention, data analytics, security solutions, even consulting services. It's a smaller slice of the pie, but it's growing, and highlights how Visa is strategically diversifying beyond just transaction fees.
So we've got service revenues, data processing, international transactions, and this other category all contributing to that massive $33 billion figure. But revenue is only half the story. What about expenses? How efficiently is Visa managing its costs?
That's where things get really interesting. Their 10K provides a detailed breakdown of their operating expenses, covering everything from personnel costs and marketing to technology investments and legal fees.
I bet those legal fees are substantial for a company like Visa, especially with all the regulatory scrutiny they face in the financial world.
You're absolutely right. Legal and regulatory compliance is a major cost for them, but they're also investing heavily in technology. AI, cybersecurity, new payment technologies, they're not shying away from spending to stay ahead of the curve.
It's like a high-stakes game of chess, constantly anticipating the next move and adapting to the ever-changing landscape. So we've got a grasp on their revenue and expenses, but what about the bottom line? What did Visa actually earn in 2023?
Drum roll, please. According to their 10K, Visa reported a net income of $17.273 billion for fiscal year 2023.
Now that's a number that makes investors sit up and take notice. But we also need to consider earnings per share, right? That tells us how much profit they're generating for each share of stock.
You're spot on. For fiscal year 2023, their diluted earnings per share for Class A common stock was $8.28.
That's a strong EPS figure indicating healthy profitability. How does that compare to previous years? Is their profitability on an upward trajectory?
Let's compare it to 2022. Their diluted earnings per share for Class A, common stock back then, was $7. So yes, their profitability is definitely trending upwards.
That's encouraging, but past performance isn't a guarantee of future success, right? We need to keep those potential headwinds in mind, like the fierce competition and those looming regulatory changes.
Exactly. We can't get complacent. It's also crucial to examine their balance sheet, their cash reserves, debt levels, and asset values. This will give us a clearer picture of Visa's overall financial health.
Okay, time to crack open the balance sheet. What are the key takeaways investors should focus on?
Their cash and cash equivalents are a good place to start. As of September 30, 2023, they had $14.8 billion in cash and cash equivalents.
Oh, that's a serious cash cushion. It gives them the flexibility to invest in growth opportunities, make strategic acquisitions, or even weather unexpected economic storms.
It's like having a financial fortress. And speaking of acquisitions, their balance sheet reflects their recent purchase of Pismo.
Right, that billion-dollar bet on the future of fintech. How does that acquisition show up on the balance sheet?
You'll see an increase in goodwill, an intangible asset reflecting the premium Visa paid for Pismo above its book value. Essentially, it represents the value they see in Pismo's potential beyond its tangible assets.
So it's like an investment in future growth and innovation, but it's also important to keep an eye on that goodwill figure, right?
Yeah.
If the acquired company doesn't meet expectations, it could impact Visa's earnings.
Precisely. It's always a good idea to check a company's debt levels, too. Visa's long-term debt, as of September 30, 2023, was $18.6 billion.
Okay, that's not insignificant, but how does it compare to their overall assets and cash flow? Are they generating enough cash to manage that debt comfortably?
Their total assets were a staggering $90.5 billion, and their cash flow from operations was over $20 billion for fiscal year 2023.
So they're a cash-generating machine. They can easily handle their debt and still have plenty left over to invest in growth.
Exactly. And their debt-to-equity ratio, which compares their debt to their shareholders' equity, is a healthy 0.57. This indicates they're not overly reliant on debt financing.
So far, so good. It seems like Visa's balance sheet is in great shape. They've got a strong cash position, manageable debt, and a healthy asset base. But remember, financial statements are just one piece of the puzzle. We also need to consider the broader industry landscape, their competitive dynamics, and crucially, their strategic initiatives.
Absolutely. Let's shift our focus to Visa's strategic goals and how they're positioning themselves to thrive in the future.
Right, we touched on their push into new flows and their acquisition of Pismo, but let's dive deeper into their overall growth strategy. What are they prioritizing, and what are the potential risks and rewards for investors? Right, we touched on their push into new flows and their acquisition of Pismo, but let's dive deeper into their overall growth strategy. What are they prioritizing, and what are the potential risks and rewards for investors?
Their strategy is multifaceted, but it starts with reinforcing their core consumer payments business. They're constantly innovating, rolling out new products and features like contactless payments and mobile wallets, ensuring they stay ahead of the curve and keep those Visa cards top of mind for consumers.
Right, it's all about staying relevant in an increasingly digital world. But they're not just focused on shiny new features, they're also investing heavily in the less glamorous but essential areas of security and fraud prevention.
Absolutely. Maintaining trust and reliability is paramount in the payments industry. But as we discussed earlier, what's really exciting is their expansion into new flows, targeting those non-consumer payment segments, like business-to-business, peer-to-peer, and even government disbursements.
It's a smart play, aligning perfectly with the broader trends we're seeing. The lines between consumer and non-consumer payments are blurring. Businesses want faster, more efficient ways to transact, and governments are exploring digital currencies and new distribution methods. Visa's positioning themselves to be a major player in all of these emerging spaces.
Precisely. It's a forward-thinking strategy focused on diversification and future-proofing their business. But of course, with any ambitious growth strategy, there are inherent risks.
What are some of the potential roadblocks they might encounter? We've already talked about the competitive landscape, but are there other challenges they need to navigate?
Competition is certainly fierce, not just from established giants like MasterCard and UnionPay, but also from a wave of new entrants, particularly in the digital and mobile payments space. These agile startups often operate with disruptive technologies and business models, challenging the traditional fee structures and ways of doing business.
So staying ahead of the innovation curve is critical. But beyond competition, what about the regulatory landscape? We touched on this earlier, but how might evolving regulations impact their growth strategy?
Regulation is a constant balancing act for a company like Visa. New rules and compliance requirements, especially in areas like data privacy and security, can be costly and time-consuming. They need to be proactive and ensure they're not just complying, but anticipating and adapting to the ever-changing regulatory landscape.
So staying agile and informed is key. But if they can successfully manage these risks, what are the potential rewards? What's the upside for investors?
The potential rewards are significant. If Visa can effectively execute their growth strategy, they're well-positioned to capitalize on the expanding digital payments market. Their strong brand recognition, global reach, and commitment to innovation give them a considerable edge.
Okay, so for investors trying to decide if Visa is a worthy addition to their portfolio, what are the key takeaways from our discussion today?
First and foremost, Visa is a financially robust company with a dominant market position, a proven track record of innovation, and a clear vision for the future. They're actively expanding into new growth areas, investing in cutting-edge technologies, and consistently returning value to shareholders.
But as we've discussed, they're not without risks. The competitive landscape is dynamic. Regulatory pressures are intensifying, and the potential for disruption is always present. It's a balancing act, and investors need to carefully weigh both the opportunities and challenges before making any decisions. Well, that wraps up our look into Visa. We've covered a lot of ground, from their financials and growth strategies to the competitive landscape and potential risks. Hopefully, you've gained some valuable insights that will help you make informed investment decisions.
Remember, knowledge is power, especially when it comes to investing. Don't just rely on headlines or stock prices. Do your research, understand the underlying business, and make decisions that align with your own investment goals and risk tolerance.
Until next time, keep learning, keep exploring, and keep those credit cards swiping responsibly. We'll be back soon with another look into a fascinating company or industry.